I'm with the CEO of Silver Tiger Metals, Glenn Jessam. Glenn, good to see you again.
Peter, always good to see you.
So you've just come back from Mexico on a site visit. Tell me, how is it down there?
It was the weather was beautiful. We of course were based out of Hermosillo, so it's getting fairly warm there now. But we had and people know I'm not going to go through the attendee list, but everybody knows, and we can talk about later who our largest shareholders are. They would be household names with respect to precious metals investment from the institutional side. We had a number of those there, and several of the larger investment banks. 3 days together, spent a full day on the mountain, and look, they were all very, very pleased with our progress. They see how fast we can get to production. They see for the capex that's going to be put in a massive return in the short term. And then we use that cash flow to develop, for the next 10, 15, 20 years, the underground once we get the pit done. So everybody was very, very, very happy. I can tell you that.
Good. Look, we've had a bit of a Mexico theme over the last couple of weeks. We just had a webinar on Mexico with some of the leading advisors and some mining companies sort of sharing their thoughts. We'll come on to, I wouldn't mind talking to you about that and some of the summaries of that. But things are looking pretty positive for Mexico in general with this election coming up. But one of the main reasons why I wanted to get you on the show, as well as this Mexico theme, is I've had some sort of ideas around Silver Tiger as I've been sort of doing a bit more DD on the project and the company. First off, are you a believer in the Lassonde curve at all?
Well, let's first talk about the Mexican election. And then I'm a believer in the Lassonde curve. We'll talk about that in a sec. Look, there's been a lot of noise about Mexico. I think it's way overdone. We have been in Mexico for 27 years, our group out of Halifax. We built 4 mines. This will be our 6th election, I think. They all have issues. This has been the last administration. There were not a lot, I'm not telling anybody what they don't know. There were not a lot of new permits. There were not a lot of amendments to permits issued. We don't we didn't care about that, but I'm going to be ready to build, end of this summer. So we had a lot of work to do over the last 5 or 6 years. We've done it all. The election will take place on June 2nd. We think whatever the result is, that we're in a very, very good position to get. As you know, we're already permitted for this project. We've filed an amendment for our current underground permit to cover the open pit heap leach. And as we have gotten every permit over 27 years we've ever sought from the Mexican government, we expect that in time, when we're ready, which we would expect to be this fall, we will get our permit to build this project very quickly.
Good, and that is roughly in line with what the webinar, well, people on the webinar, the experts were essentially saying is obviously you got the elections in June, and you need to wait a few months for the bedding in process, but then we will start expecting some permits out of the door sort of towards September, October time, right? So that I
think it could, honestly, I think, and I know a lot of those experts. Somebody sent me the attendee list while I was in Mexico, and a lot of those guys I deal with on a daily basis. But from my perspective, the way the power transition is going to work is the election will be the 2nd. It'll be the end of September when the transition to whoever is the winner will take place. 2 things, which is good. That used to be the end of November. It's the first election that's been this early, so that's good. We'll speed it up. But what people have to also know is all of the civil service in Mexico changed with the newly elected president. So as of the end of September, everyone, head of Semarnet, head of all of these various organizations with the government will change. Let's give them a month or 2 to get in, get their stationery on the desk, get the computer set up. I think it'll be later this year. We're going to see the permits we require, and that'll be just in time for Silver Tiger.
Good. Okay. Look, I want to get some more updates on permitting and the PFS and the open pit, and I know you've got a pretty cool verified deck for us to run through in a minute as well. But
no, I got to bring you back to that Lassonde curve. I just had to finish up Mexico. We've been a believer in Lassonde curve for 26, 27 years. We've gone through we've gone up and down and back up 4 times. So we know it pretty well. What were you thinking?
Well, let me share my screen with you. And and show you what I'm thinking at the moment. So what we have in front of us here is a Bloomberg chart where we have the gold and silver prices, gold in black and silver in blue, and then Silver Tiger Metals as a price chart in orange. Um,
That's
so
perfect. I can see it
I mean,
perfectly.
overall in the last 5 years, you're doing pretty well anyway, up 122%. But you can sort of see, and when you go into your press releases, it's quite evident here. You go back to 2020, you can actually see activity starts ramping up around July, June, July. You start
That's
listing,
correct.
you start coming out with drill results, and this is exactly when we start seeing this
Well,
up.
Peter, I'm just going to throw in from July, where you just showed, until our most recent raise that BMO led. Um, it was $75 million, all bought, straight up common shares, and that went into exploration. And what a wonderful time to be a CEO when you're hitting drill result after drill result after drill result. And then you got to build it, because faith. Let me. I'm not going to apologize for that.
Well,
I was with.
but you
I
was
was with
rewarded for it, right? So this is the whole
We
point.
were rewarded, but the point I want to make is, and I was with Joe Foster on that site visit. I'm chopping names from Van Eck, and we were having, I think it was at dinner, and I said, Joe, how many make it? I mean, how many resource companies make it to the point where they get the economic test they can build on? He said, oh, it's way less than 1 in 100, maybe. And we threw the numbers around, not being his numbers, but is it 1 in 1,000? So we've already won. All these charts are wonderful. The PFS we deliver, we'll talk about later this summer. I've already won. I get to build a project that's going to make a lot of money. That's a real short list. People need to know that. Now let's talk about that curve again.
So just on the so obviously you've been rewarded for the drill results, and you've spent the 11 million that you
Yes.
raised at the time there, and that's been fruitful. And obviously when you look at this Lassonde curve, there's a very outstanding. I mean, it's almost perfect, really, in terms of you see this low period here before you actually start doing drilling, and then you see this rise, which is exactly what we saw back in 2020, late 2020, with you guys. And then you have this
Yep.
orphan period, right? And
Yep.
below, at the very bottom of the orphan period, you usually find it's just above really before where, or quite a bit above where you actually you started taking off. So going back to your chart, that is roughly where you are now. And I guess the main thing for you guys, and I think the way that I look at you guys is you've managed to squeeze this orphan period from 3 years or 4 years into really a year, because I think you're at a point
Correct.
now where you've opted for a starter pit, you can cut down to a pre-feasibility study without having to go further into a definitive study, and you're already within 12 months of getting your permit, perhaps even 6. So really you should be towards the end of this year, right at the bottom of this curve, and really in that mine construction phase. And so that's just one of the observations that I was going to bring up with you.
Okay. I think, Peter, you've nailed it. Think about it. September until now, less than a year, we've gone from that MRE, PEA, and the PFS will be July or August. So let's call it a year. And make no mistake, for the pit, the PFS is what we'll build on. We're going to have, and we'll talk about it later, those first 3 years, measured and indicated. It's 1.7 year payback. The bankers are in the data room right now. We'll have that all ready for the summer, some offers from them, and we'll be ready to go when that piece of paper drips. So yeah, we really condensed it, but we think that we're like, I don't want to compare the two. If we were going to another level and had to do feasibility, well, you're going to put another, what, 8 months, a year, into that going to the bottom. We consider our PFS our feasibility. Now, that's not the right legal word, as a securities lawyer would tell you, like myself, but that's what we consider it. It's the build document. Let's call it that. And the other thing that's really exciting, and I want people to know, and this question was put right to Francisco Albalese. People may not remember that I poached him from Argonaut about a year ago. He built all of Argonaut's big open pit heap leaches in Mexico, and then permitted them, built them, ran them for a decade before he came with us. And he was put on the spot right there with all of those smart people that were on that site visit, and all those institutionals and bankers. And he said, 12 months start to finish. So, boy, 12 months to get it all ready and 12 months to build it once we get the piece of paper, you just can't go much faster than that.
Okay, and I think the main thing is, and it's really important to understand this. How is that possible? Because there's obviously a lot of infrastructure already on site, right? And that's a big part of this.
Well, 100%. And I'm going to tell you what Mexico has always been. And that's why, in my opinion, open pit heap leaches in Mexico will never go away. Right now, on the precious metal side, 67, 68, 70% of all of that metal comes open pit. We call it a flowering epithermal system, big stockwork, and then narrow vein silver underground. That has been all of the biggest developments in Mexico. You know why? Because narrow vein silver underground is really, really hard. Some of my peers have found that out. We have never gone for a project that didn't have a stockwork zone, ever. So in our time in Mexico, underground mining really hard, really expensive. Stockwork easier, lower capex. All you're doing is moving rock from the mountain to a crusher, putting it out on the heap leach. That's why it's so fast. And I'm going to tell you, if I was telling you it was 12 months, I don't think those smart people would listen to me. But when they listen to a guy for the last 20 years who built pretty well every big heap leach, all the Argonaut ones, and he says 15,000 tons, 12 months start to finish, that's the number.
Good. Okay, look, maybe we can run through this verified deck because I'd love to see some visuals and actually get my head around what this is actually going to look like.
So, look, just for a reminder for those that haven't seen this in a while, we're in Mexico, we're in Sonora, we're 100 kilometers from the US border. El Tigre is a big, big land package. What you see on the screen there is about 35 kilometers. 25 kilometers of the Sierra Madre run right through the project. We're not going to get into all the details. People have seen it before. We just got to cut to the chase and talk about the PEA slash moving to pre-fees. But all of our drilling was around that old El Tigre mine. That's where all that new resource estimate came from. The PEA was generated. Probably 3 or 4 kilometers of those 25. We'll get to the rest later. The old El Tigre mine, 100 million silver equivalent ounces, turn of the century, 1908 to 1930 at 2.5 kilos. We've drilled under and around that old mine. It's gone well. Let's get focused right in on forgetting the drilling. Let's talk about, some of the highlights just of what we've done here in 23. Bring everybody up to speed quickly. And a little bit of 24 because pretty well all the work we talked about there is done. We came out with that MRE, the resource estimate for the underground and the open pit, September of 23. That's not that long ago. And call it, for simplicity, 85 million silver equivalent ounces in the pit, 90 to 100 million silver equivalent ounces already in the underground. Underground is just in early stages. We'll talk about that at the end because I think it's going to be important in the fall. As we go through that Lassonde curve we talked about, I'll come back to that. PEA was beautiful. Highlights on that PEA and why we loved it, just to remind everybody. Remember we talked about earlier, Peter? Easier, lower capex, drives capital. That's your stock work in Mexico to go underground after the pretty well, not unlimited, but unlimited for 10 or 20 years potential for those high-grade silver veins. I mean, look at the numbers. They speak for themselves. You're talking about almost a 300 million USD NAV. This is the PEA highlights. Pre-fees we'll go to shortly. You're talking 56% IRR. You're talking 1.7 year payback. Makes $500 million almost USD after cash, free tax flow from an initial investment of 59 million USD. That's why you build the pit first. It's why we've always done it this way. Why we will do it this way again. I mean, you can look at all-in sustaining costs, and we should talk about that at the end, Peter. All-in sustaining costs for silver are going to be really important going forward. I've got some reasons I think that. The Tigers is $11. Very, very, very important. So all that being said, let's go back to those highlights and then we'll jump right back into a couple of diagrams to show you what we've done. That really is nothing. That was November. What's a PEA? I can't build anything on that. So we immediately start drilling another 30,000 meters. They're all finished. I think there's 200 meters left. Actually, I just got an update this morning. One hole left. And that's so that by July or August, I can come with that PFS. We're going to delve into that a little bit. We'll build on that document. That's the pit. And then our plan, so that people don't think that we're just going to sit on our laurels, that's going to be done. Get the permit, build that. We've talked about how quick we can do it. I think it'll be fairly easy for me to get that money. I've raised $75 million USD in bought deal financing to smartest institutions in the world over the last 3 years. 59 million USD for the open pit. I'm not going to say it's going to be easy, but I'm very comfortable I can get that done. And for the conversation I've had with the lenders, et cetera, so far, we see a sight line to that. Next fall, we're going to get back to drilling the underground. And we're going to drill that from the underground. If people remember, I've basically gone and developed enough now that we can start the underground drilling. I'm going to show you a little cartoon here before I jump into the PFS and 2 or 3 minute update on that. This is what I talked about earlier. Remember I said a flowering epithermal? That's Mexico. That's Mexico for us. Big stock work. There's that 85 million silver equivalent ounces we're going to take out of there. There's your high-grade quartz vein. This is all, as you know, underground from here down. Easier, harder. We walk right here now. PEA, first half of next year, on that first 90 to 100 million silver equivalent ounces delineated. So get ready for that. We've been doing that work in the background. We'll start drilling again in the fall. Like to have some high-grade silver results coming out through the fall as we're building the stockwork zone. And you can see where we'll drill those from. Not only we get that high-grade quartz vein, but our new discovery we've seen, which is the shale zone. We talked about that. We're not going to get into it. And a big sulfide zone. That's the future. This right now, PFS right away, underground, more drilling by first half of next year, the first economic test on the underground. So as you can see, there's always the next step and the next step. And that's how we basically will unroll this. Let's talk about the pit and the pre-feasibility study. I want people to understand a little bit, if I'm not going into too much detail, because people hear all the time, PEA, pre-feasibility. What does it all mean? Well, for us, it's fairly simple. The PEA delivered for this, and there's your pit. You can see it right there. That's 2 kilometers, 350 wide, 350 deep. There's your open pit. That's about an 11-year mine life. So the PEA, and we did a lot of drilling to release this PEA, said we had 53 million tons of ore. 11 million of that was inferred. The other 42 was indicated. And it had a 2-to-1 strip overall. And the grade, call it 0.7. A lot of pits in Mexico are 5-to-1 strip. Move 5 tons to get a ton of ore, or 2-to-1. That's the magic and why those economics are so good. 0.7, I call that a high-grade pit, even though the word doesn't exist. Some of those big pits Francisco built when he was at Argonaut, 0.25, 0.35, and strip about 5-to-1. So those were some very good things that came out of our PEA. Metallurgy, 80% recovery on the heap leach overall on the silver equivalent basis. But guess what? I can't bank that. So what do we have to do? And this is what we've been doing since last October, September, October. 30,000 meters of drilling. What does that give me? I'm going to show you. Very important how we move the pre-feas forward. First thing is, you never want to lose that 11 million of inferred. You have to move that to indicated. People probably know, but they should know that inferred doesn't count in a pre-feasibility study, only indicated. First thing is, move those 11 million tons. It was mainly out here on the fringes. We drilled all that in the 30,000 meters. That's all done. The vast majority of that will basically move to be tons you can mine pursuant to the PFS. Next, remember I said we had 80% recoveries. This is a nice little education. It's kind of a good review. Well, we can't rely on that. That was bottle rolls. Now we got to put all of the metallurgical tests need to be done in columns in Nevada. They're almost finished, about 2 weeks left. They've been there the last 3 or 4 months. So what you need there is you need to drill 8 to 10 metallurgical holes all across the body, 2 kilometers. So you get a good feel for all of the different types and areas. They all go in columns. And that will give you a high enough test with enough data that you can put that metallurgy into the PFS. That's all done with a bow on it. Next thing is, remember, we have to mine this. So we need to have a pit design done. We use Golder. That's a household name as far as pit design. They also have done all the drilling and design for the waste dump and also for the heap leach. That's all finished too. That drilling means that 13 or 14 holes across the body of the open pit need to be done. All done. They're called your geotechnical holes. They're done. They've been done for months. Golder are almost finished all their work. Pit slope, all of those things. You'll see that full study delineated in the PFS. Now, the last thing we did, which was the most important thing, and why we can build on a PFS. The mountain has to cooperate with you on that. The bankers like to see measured and indicated ore for a good period past the point where they're going to get paid back. Our lenders, PEA says right now, stay tuned on the PFS, 1.7 years to pay back all of the $59 million in capital. Imagine, that's how robust this pit is as far as generating cash flow. So we were very fortunate. You've heard me talk about this right there. I'm going to show you a picture of it. That's the starter pit. That's where those three main veins that are at Tigre came together, and that's why that high-grade mine was there. And in the stock work, you had a beautiful spot, higher grade, better strip. I'm going to show it to you right now. There's your first 3 years of the pit. You can see it. It's clear to see. We're going to take that ore right here, and we're going to truck it to the crushing, and it's going to go out on the heap leach, and some of it's going to go to waste. That is 3 years of production. Call it 9, 10 million tons, 11 maybe when it's done. That was indicated. Bankers won't hang their hat on indicated, but they will on measured and indicated. So that whole area there, about 500-600 meters, that's all been drilled at 25 meter spacings as part of that 30,000 meter program. In the PFS, you're going to see all that as measured and indicated. That's how we can build on the basis of that. And Francisco, with his experience with the other Argonaut mines he built, that's exactly how they did it. They only had 2 years out in front of them. Here we have 3. So the mountain helped us with that respect. Last thing I'm going to show you, and I think this is, we press released this, so I really can show it to you if I can find where I put it. But from my side, you know, basically, as we started to look at really the drilling that we had been doing with respect to, there it is there. I apologize. It's a new slide, so it was hard for me to find it. This right out of the last press release. And what's really, most people should understand is the education of PEA pre-fees. It's for all of us. You usually, if you had 53 million tons to start, you're probably, in many cases, not always, going to go down in tonnage and contain metal because you've got a lot of that indicated that goes in the pre-feasibility study. You won't be able to bring all of the inferred over. We've been lucky in bringing a lot. But the other thing is, as we've drilled this, we've got some very nice surprises. This is from the press release. This is the same diagram which people can look at. And it's really simple to see what we've done in that 30,000 meters. Look at that. This is what was in the PEA. That's that 53 million tons. This is real simplistic, but call it that. Now we've drilled more. And as you've seen us drilling more in the footwall and in the hanging wall, we have found more mineralization. So it's really simple to think about this. In order to, that's where your strip comes in. To get that 53 million tons, you have to dig that out. This is all waste. This is all waste. What's happened is we've found more ore. That's been in our drill results. That will be reflected. We found more ore, so when we put out this pre-feasibility study, we're going to have to do an MRE, another resource estimate, because as you can see, the checks is more. What's beautiful about this, not only have you found more ore, in the PEA, that was waste. Now it's ore. So you can understand how that's going to make things look better. Stay tuned for that in the PFS. Last thing is, we'd never really drilled deep down underneath the pit. When we did, we call this the keel. Look at that. You're getting down into some of those intact veins. We have now added this ore to the pit, and a lot of that is higher grade because you're getting into some of those high grade Tiger Sites Kelly veins. So that will be added also. So think about it this way: we've got an MRE coming in the summer with more PFS. I've told you how we're going to do it. All the work's done. You'll see all of those new results. So it's pretty exciting. I laugh. I got to show you one last thing before I get out of here. You asked me if I believe in the Lassonde curve. That's one of my slides, Peter. So yes, we think about it all the time, and we know exactly where we are in it. And we think, as you can see, we're here because we'll build on a PFS. And when we build it, it's just inevitable that that's where we go.
Right, so there's just a few more things I need to. Well, I'd really like to ask you about. I think you've covered off
Sure.
PFS and what to expect very well.
And Peter, that was detailed, but I find some people, even me sometimes, you forget the exact process from drill, MRE, PEA, PFS, and it's nice to see for people to see the whole transgression. I think the whole journey.
Yeah, I agree. And you mentioned ASIC, and ASIC was so low, and I wouldn't mind you just touching on that a little bit more.
I've been repeating these numbers. They're not my numbers. They're the Silver Symposium's numbers, but we all know what they are. Okay. This year in 2 silver projects, we're going to have 800 or a little more silver ounces produced. The world right now, if you believe all the projections, needs 1.2 billion silver equivalent ounces. We can see the shortfall. We'll talk about that in price in a minute. But what really comes out of those numbers is last year, at the end of the year, it's been going up. I think it went up 44% last year. The all-in sustaining cost across these silver projects, and we'll talk about those in a minute, went up to $16.32. And it's projected to go up by 9% a year for the next 9 years. Do the math. I have. If those numbers from the Silver Symposium are to be believed, and they should be, they're the experts, then how can the price of silver not, and maybe where it is right now, not try to stay in front of that? Because none of us are going to be able to produce silver for basically less than we're going to be paid. We'll all be out of business. That being said, think about this pit, $11. Think of the strategic advantage that we have. Last thing I'll say, and I've said this many times in many interviews, and it's very powerful to me. We've been working for the last 6-7 years to get to the point where we can build this project. Let's say we're right. We get it in the fall, late 2025. I'm going to join a list that I'm really excited about. Right now, there are 40, I think it's 48, could be 47, true silver producing assets in the world. By next year, that's going to be down to 42, because we're always mining ourselves out of business, Peter. The next year, it's going to be 38. Boy, am I excited to be 39. It's a simple business model. With the costs we have, we think we've timed it very right. I'd love some of your thoughts on price. I mean, look, $28 silver and $2,300-$2,400 gold. We don't have any of that in our projections. And as miners, that's like, you wake up from and that wasn't a nightmare. That was like the best dream you've ever had, but that's where we are. If you use those numbers, we used 1850, I think at 22 in our study. And we made $455 million over the 10-year mine life. You plug those numbers in today, that turns into $800 million after tax free cash flow, USD. So the price right now, and you can see my peers. Look at IL, look at Silvercrest, look at the market caps they have, $1.7 billion. Our production coming out of the gate just with the pit is going to be right in that ballpark. So when I see that Lassonde uprise, in my mind, it goes a lot further for Silver Tiger, but I've got to be careful what I say. if our peers are being valued on the basis of similar production um, to us. So we know how to win. There's only one way. It's those who believe we'll get the permit and build it, and we
Well,
won't.
that's the opportunity, isn't it? It's de-risking along the
It
mine life
really is.
development cycle, and you're on your way there. Um, Final question for you, Glenn. You've mentioned you've done this 4 times already in Mexico.
Our group across there's a big group of us and other companies, but that group out of Halifax has done it 4 times. Yes.
Okay, what's happened to the mines previously? Have they all gone into production? And if so, what was the exit strategy of you and the group, and how have you done off the back?
Uh, One of the first projects that was done went to a $2 billion market cap in the NYSE. It was mined for a long, long time, and basically, in the end, it was sold to Carlos. It was acquired, and then one near that asset was then sold to Carlos Slim for 750 million USD. Another one of the assets put in production was also acquired. Um, and that entity sold that asset actually to Endeavor Silver quite a long time ago for $250 million. The next asset was a small asset that was basically developed and sold to a U.S. company, which was in turn acquired by Alamos. Um, and, you know, we basically have another large company in the game right now that's basically getting ready to build their big asset, 100 million USD in the bank. And basically, along that way, they developed an asset and sold it to Agnico several years ago for 120 million USD. The way we look at things is we don't control anyone's boardroom. We always set out to do one thing: drill, PEA, PFS, build it. If someone comes along before you build it and needs to have it, then basically that happens. But we don't plan that way. But as you can see, I guess there's more. When I say we've built them, 4 we've built, 1, 2, 3 of them. Besides that, different ones were sold to majors along the way too. So they all have a different route. We're pretty happy with our track record.
No, it's an outstanding track record. Glenn, thank you very much for the update. I guess the next time I see you would either be in Mexico on site, or we'll have to do a catch up around your PFS.
Well, listen, I'm going to hold you to that one now. We've been talking for a while, and I just got back from that site visit, and I love your idea to get down there and to do a virtual. Like I get to take certain people there. Would it ever be nice if everyone could do the site visit? If everyone could just see, as you proposed to us, to go and video and look at that open pit and see that first 3 years and know that why the strip of it's only zero point 0.4, really zero, because there's air in front of it and the mineralization. You have to walk and see that, and we should try to do that. When can we do that? You want to wait till after the election?
After the election sounds good. Look, yeah, you're spot on. Look, I think the main thing I always say with these sites, I go on quite a few site visits, and you learn more from a site visit than you ever would from a presentation or even an interview like this. And it's bringing that experience to not just a handful of analysts that actually get to go on these site visits, but actually to the wider public and everyone in the industry.
If we do it, and you video it, and you have all your fancy stuff to do it, we'll do it exactly as we do it for the largest institutions and some of the large investment banks. It'll be the exact same show.
Perfect. Glenn, we'll get it organized. Thank you very much.
Thank you, Peter.